I've got oil at 85. It's on pace for its 9th weekly gain. I've got inflation concerns all over the place. Prices are up everywhere. Rates are moving up. Is there really nothing to be concerned about?
No, there's a lot to be concerned about. I think the consistent thread between Rick Reeder and David Tepper was centered on rates. Reeder thinks that at this point, rates are going to be well supported, and therefore stocks can head higher. And Tepper said himself that if rates stay at these levels, that stocks can head higher. I think he said another 8%, Scott. So the pivot point is obviously off of rates, and rates are going to be determined by what's happening as it relates to inflation, right? And so I think as liquidity starts to come out of the market, it's irresponsible. Yes, it is hard not to love stocks, right, because of the economic reopening, et cetera. But it's also irresponsible not to take advantage so that you don't have a situation like the fourth quarter of 2018 where there's a tap of the brakes and you give up all your gains for the year. And so what we're doing is we're taking advantage by rebalancing and still staying invested. We're just going to where we like more. We're also taking advantage of what we think is going to be a rotation to some of these cyclicals.
Yeah, but what if I said, though, like the Tepper view, it's like, well, you know, cash, you get nothing for it. High yield, spreads are so tight, rates are so low, bonds, they look like a bubble. Valuations in stocks are so high, and, you know, maybe that's going to change if rates continue to go up. So, again, it's all about risk reward.
Yeah, and some of the best risk reward is in some of these yield alternatives. You sell volatility when volatility spikes. So we've been doing a lot of that. We've been doing a lot of private real estate, which has high cash flow characteristics and inflation protection. You're not getting a lot of bang from the buck in traditional fixed income, although Gunlock said on your show last week, we get rates to 2% on the long bond, which you're going to see is a 30% positive return if there's a retracement of that, so it becomes a good hedge again. So I do believe that rates aren't going to get away from us. They're going to get persistently higher, but let's do some intelligent things at the periphery, which include real estate, you know, selling vol, adding non-traditional assets into the mix. And I think that's how we rebalance today, because you don't want to rebalance into fixed income and get absolutely punched in the nose when you suspect inflation.